Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Tuesday, December the 22nd. The year's 2020. Let's talk trading. A reminder to keep it simple. Let me give you another reminder first that these videos are for educational purposes only, and your results may differ from mine. A reminder to keep it simple. I've been corresponding with a few traders out there, and I don't need to call them out by name, but they have one thing in common. They're trying to make things more complex than necessary. Price goes up, price goes down. That's what price does. You can buy or you can sell short. You exit the trade with either a profit or loss. Trading is very binary. And some traders, I guess they want to, I don't know, split hairs. They're trying to, what I say, they're overanalyzing. They're trying to take it to the nth degree. And to me, they're just really going to wind up doing more harm to their account and themselves than good. So let's just go through a few charts here. Because the first thing, this risk management, this is something that's really simple. You decide how much you're going to lose per trade, meaning that you're willing to lose it. You're saying, okay, I'm going to risk this amount of money. If the trade goes against me and I'm down this amount, I'm going to cut my loss. And that's simple, but some traders want to, start playing games with this simple equation. This is simple equations, There's, and why they want to try and make it more complex. Maybe they read something or heard something or watched somebody else's video. But, if you're here and you're watching my stuff, it's all simple. I mean, I don't do anything complex because it's not necessary. We can look at a monthly chart. Price goes up, price goes down. We're 47 pips above the open. If you would have taken the simple, gone long here at the break of the previous month's high, there were a lot of pips to be made. See, it hits 36.23. You would have been in at this called 3,400. That's over 200 pips. Well, it's kind of easy to see here how far it's moved back off the close. So over 200 pips, one simple trade. Broke the previous high or broke out of the upper wick zone. Now, the thing is, I present more than one method because not everybody wants to do one of the methods. Or, some methods work best near the beginning of the session. Some work best, towards the end of a session. Like, some work really well in London, not so well in the Asian session. And, depending on where price is, they almost always work in the New York session. But, this is simple. Very, very simple. And then we move down to the week. Well, here, if you took the breakout to the low side here, out of that lower weekly wick zone, there was pips to be made. Once again, simple. Now, yesterday was a kind of a crazy day. It really was. Because if you noticed, we filled both gaps yesterday. Filled. All the pound pairs. It was, I guess the trading was really crazy. The opening range here. This is the opening range for the month, and you can see it broke it by just a few pips, but that's still pips in your pocket. It crossed below the weekly open. If you took that trade or a buy zone trade off the weekly open, there was pips to be made there. You can see here the opening range for the week is just really kind of ridiculous. But once again, you know, we covered the gap from the week before, and we also covered the gap from this week, all in one day. 112 pips above the yearly open, and you can see here price dipped down and came and rocketed right back up above it. So once again, a simple horizontal line trade. Now, there was a trader who was asking me, and you might have saw their comment, or might have seen their comment, asking me to, I guess, elaborate on the inside bar trades. Well, they're just simple horizontal lines. What's an inside bar? Well, you see here, on this particular day, the high was lower than the previous day. The high was lower than the previous day's high, and the low was higher than the previous day's low. So this bar ranged inside of this bar. And so what that means is price was compressed. And what usually happens is when price gets compressed, it's like a spring. You compress a spring. Once you release the tension or the pressure, it springs out. And so here you can see price sprung out. And then it came back in, and it sprung out again. It came back in, and it sprung out again. It came back in, sprung out, came back in, sprung out both sides. You know, it came back here, went right through it, and came in here one more time. And that's just what happens. And it happens on just about every time frame. I mean, some time frames, I usually don't trade inside bars off the 1 minute. Sometimes, depending on the size of the bar, I might trade it off a 5 minute, but 15 hour, 4-hour bars, they're more apt. But here, I just like to look at the daily, weekly, monthly, because if it's been compressed on a day, then usually, it's going to break out. And here it broke out both sides. So what is it? It's a simple horizontal line trade. Price is in here. If it gets to 33, call it 93, you go long. If it gets down to 33.89, you go short. That's it. Nothing that difficult. It really isn't. And in fact, I don't know, maybe you can't see that very well because of the color I chose. Let me choose white. Maybe you can see that better now. Out there in YouTube land. So that's pretty much all you do. Then you place your stop loss. If you want to place it on the other side, then you adjust your position. Otherwise, if your position size, otherwise, if you keep your position size constant, you have a constant risk, then you put your stop loss in that place. You'll win some, you'll lose some. It's not gambling. Somebody posted it was gambling. What's the point? Well, the point is you want to increase your account size. As you can see here, once again, the pound pairs, all over 100 pips in range. Pivot point. Now I have another trader who's been quizzing me on the pivot point. And once again, I really think they're trying to make things more complicated than necessary. I mean, you've got the open, you have the pivot point here. You take your short trades, it hit the pivot, collect your money. Um, you trade toward the pivot, away from the open toward the pivot. But he was running, the one of the indicators I wrote. I think he was doing the price travel analyzer. Um, and he was trying to put in all these conditions, extra conditions, trying to find an edge. But the thing is, the edge is already there, and trying to filter down even further, to me, is one, you're overanalyzing. Two, you're going to probably filter out some winners. So, but I guess he says he's taking losses. But I mean, if you're trading the Asian session, maybe if you put your stop loss here, within the buy zone, yeah, you would have taken a loss here, but then you got another trade here and you would have made it up and then some. But you see this every day. And then let's see, and we see the pivot was taken out once again. Here, let me skip ahead. But here, daily pivots. Look how many times it's missed the pivot this year. 1, 2, 3, 4, 5, 6, 7 times out of 200 and some trading days, or about 200 trading days, it only missed 7 times. Now, sometimes, it takes a couple of days for it to hit. So we've got this one. It took 1, 2, 3 days. Then he says, well, if it missed it on this day, what about the next day? It's just like, once again, sometimes you could just look. Okay, so it missed the pivot here, it hit it here. It missed it here, it hit it here. It missed it here, it hit it there. It missed it here, it hit it here. I mean, I don't really see too many 2 days in a row where it missed the pivot. And you can see that from the missed pivots chart. Or over here. I guess there was 2 days in a row. 09, 08, it missed the pivot. So let's go back here and let's see if we can find those. September 8th. Where's September 8th? Okay. Yeah, we had here and here. It missed it 2 days in a row. On this particular day, if you faded the pivot, it looks like there was a chance to take some profit. Not so much on this day. But anyway, and in case you want to know what indicators, you got the missed pivot plot that does this. You got the missed pivots that does this. And it's the MP bar. It's a donational here. And the mid dots is what's plotting the pivot. But, once again, just keep it simple. Then another trader was asking about the wick zone. And I said, are you profitable doing what you're doing? He says, yes. I go, well, then don't worry about anything else. Don't change a thing. I don't know how many times I've said that to traders. If you're profitable, don't change a thing. If all of a sudden you stop being profitable, that's when you look to change. If it's not broke, don't fix it. Yeah, you might want to make it better, but in the process of trying that, you might wind up messing things up. You've got a strategy, you're employing the strategy, it's working, keep doing it until it stops working. Don't muck around, Simple chart here and seeing what price is doing back up to the 60s. Once again, price gets in the 40s, it goes up. And you can see here how many times it's done that. Simple wall mall, long at the line or long at the break of the previous high. Pips in the bank. So, fellow traders, I implore you, keep it simple. It's not what you trade, it's how you trade it. So go out there and drain the banks, okay? This is TheRumpledOne, over and out.